Okay, welcome everybody. I believe we are live. Is that correct, Denzel?
Yep, we're live.
Awesome. Hi everyone. Welcome back to Ep.2 of the Winnipeg Market Watch podcast. I am Keenan Brown, realtor with Judy Lindsay Team, and I am here with my partner in crime, Denzel Soliven, notable real estate developer and investor.
How's it going, guys?
Today, Today, we are going to be talking about the same sort of thing we did last episode, giving a review of the market. We're going to talk about ongoing developments and what's been going on with Denzel's business. And then in the last section, we're going to flip the script and have Denzel interview me. So without further ado, we're going to get to section one here right away. We're going to talk about the market. But first things first, after seeing all of the data for the month of January, I'd say I was pretty pleasantly surprised. Denzel, any initial impressions before we dig into the numbers?
No, not really, no.
Okay. Well, fair enough. So the January benchmark price was up to 382,800, which in December, I guess I'll, for context, add that it was at 380,000. That marks a 0.74% year-to-date gain, and we are now down about 10.5 or so percent from the all-time high. I'm pretty impressed that this is the second gain month that we've seen in the index, with a slight uptick in December and now an almost full percent in January. I feel like this is a really good start to the year for pricing, and I'm very happy to see this personally. This is exactly on the trajectory that I thought we would be on a couple months later, and it's nice to see it early. Denzel, was this something that you sort of anticipated, or were you of the belief that the market would likely have a few more losing months before turning up like it did?
Well, for me, I already had a bit of a sense that people were starting to get used to the rate environment. Back in 2022, December, it was like peak fear, I would say, or at least there was tons of negative sentiment in the market. And so seeing what happened last year in the spring was definitely a surprise. But now, after about a year, I would probably say about 18 months of just higher interest rates, people are starting to become used to the idea of, where mortgage rates are right now, what the mortgage payments will look like on the properties that they're interested in buying. And not only that, I actually think that um, with all of the announcements with the Bank of Canada, the Fed talking about them holding rates, I think it was pretty clear in December that we were going to see some upward upward trends in price in the coming months. So no, I'm not very surprised with that. Um, yeah.
It's a good perspective to take. And interestingly, we're still seeing this slight jump in prices despite most central banks in the month of January mentioning that the rate cuts would likely be off the table until sometime closer to June, whereas some speculators had thought that March or April would be the first month. But at least in our market, it doesn't seem like there's any kind of reaction, and the pressure is already starting to build. So I wanted to add as well, and this is something that is very relevant to your business. January marked a rule change for our local market here regarding off market listings and properties not advertised on MLS. It is now the case that any property that is listed exclusively with a realtor but not on the market, if it is advertised publicly, i.e., in a way that is not simply a one on one conversation with a member of the public or another realtor, it must be put to market within 3 days of said conversation or said post being made about the home. This has driven, as far as I can tell, a lot more people to either keep their exclusive listings private or take stuff to market that may have not otherwise gone to market. Denzel, as somebody that's very much involved in the off market scene, has this been noticeable to you so far, even though it's only been about 30 days of this rule being in effect?
There definitely are some properties that I see that go up or have gone up in the past 30 days that I would suggest, or that at least look like something that I would buy off market, whether it's tons of clutter in the photos or just a messy listing in general. Um, you know, although with that being said, I never really bought properties outside of one in North River Heights last summer that was, I guess, advertised um amongst their agents in
Right.
in whatever groups that they may have had. But for me, it doesn't really affect my business all too much. I mean, I'm spending time on the phone, cold calling real estate agents, seeing if they might have anything interesting coming up. So for me, it doesn't affect me a lot. But I guess one could argue if the agent who gets that call of a seller who is looking to sell and maybe isn't interested in the public market, um, it could be a bit more challenging to get in front of that if they're not, because I can't call everyone. So
Right.
um, it might be a little bit more challenging to get in front of those opportunities. But either way, when we walk through properties, and this, Keenan, like whether it's on the market or off the market, we still write the same thing, you know.
It's true.
Um, we could be 50, 60, 70,000 apart from the asking price sometimes. And I mean, we haven't really been successful, but you never know.
Yeah, and you know what? There's going to be situations where writing offers like that don't work out, and that's a-okay because the 1 in 10 or 2 out of 10 times that it does work, you get yourself in a deal for what would have been a great price either on or off of the market.
Exactly. Yeah.
So, in terms of supply, despite this rule change, both on a year over year basis and a month over month basis, the number of active and current listings are relatively in line with the past. But what I thought was interesting is transaction volume in 2024 is both higher than January 2022 and 3. And in addition, transaction volume is higher than December of 2023, which was the past month. Um, in combination with all of this, the average sale price for detached homes is actually above the benchmark price and has been higher than most Januaries aside from the very, very hot January of 2022. Are you surprised at all to see the activity in both number of sales and the very minimal change in supply over the past couple months and years here based on this data, Denzel?
Again, I don't I'm not very surprised with the like just with the great stats as like a house flipper here in Winnipeg. Um and Keenan, we've spoke a lot about this sort of thing and sort of what our anticipations were for January. I do find it interesting though that transaction volume is like I actually didn't know that, but that transaction volume is higher than 2022 this month. Is that right?
That is true. It is
Wow.
absolutely true.
Yeah. So, I mean, one could argue that was an anomaly in terms of like COVID and the pandemic and stuff like that. And so, yeah, I nothing really surprises me. I think there's a lot of pent-up demand. Tons of people are unlike us, just being really involved in real estate and watching the market almost as if it's like a stock and seeing where prices are going. We can see the changes month over month. But for someone who, let's say, took a break from buying or took a break, when interest rates started to jump up in, let's say, June and July of 2022, it's been a long time since they bought anything. So for seeing transactions on the rise and some of the dialogue with, again, central banks, I just feel the sentiment is just improving significantly. And I think that's just going to continue to change as we move forward into the year here.
I couldn't agree more. And actually, it's very appropriate that you say so because I've been saying for a couple weeks now that both the attitude of buyers and sellers that I've been speaking to in my personal business has been more positive this past 30 days than any time I can remember in the last 18 months or so, which which is extraordinary because usually that doesn't start until April and it's January. Well, now it's February, but you know what I mean.
Yeah.
So I'm really happy with what I'm seeing there, and I do have very high hopes for the rest of the year in terms of both number of sales, listings, prices, and I think that we're in for some really exciting times here over the next little while. But
Yeah.
moving on to areas, there were a few big surprises for me in some of the hottest areas this year by absorption, which for those of you who are unaware is just referring to the number of listings added to the market versus the number of sales that actually occurred. Um, Given that this is only the first month of the year, this list is almost certain to be jumbled and jump around a whole bunch. Like notably, there are areas like Meadowood and 2E, which had perfect absorption, but there were only 2 listings and 2 sales. As time goes on, I'm assuming more people will sell their house in 2E, and some of them may or may not sell in any given month. But the biggest surprise to me were one of the hottest areas was actually 1M, which is Lindenwoods. And Lindenwoods features an average sale price of $644,000, which is definitely on the higher side of the city of Winnipeg. I'm surprised at this because for the last probably 4 or 5 months, it's been the case that anything priced at about 450 or higher has had a very, very hard time selling unless it was underpriced or the situation was prime for multiple people wanting it at the same time.
Mhm.
This is sort of the first time in a while that that trend is broken. And I'm personally very pleasantly surprised to see it. But I wanted to ask you, Denzel, does that data change anything for your 2024 strategy, or are you still planning to focus on that 350 to about 450 price range as an ARV for your projects ongoing?
Definitely. I think that first of all, the if we were just to think, because my business has a lot to do with investors and handling other people's money, I think about the return on investment. And if I have an investor that comes to me with, let's say, 500,000 to 750,000, something like that, and we are looking to deploy that amount of capital in any given quarter of the year, your money goes a lot further when you're buying stuff in the lower price ranges, and one can argue that there's a lot more competition because just by, common sense, it just makes it makes a lot more sense to be buying properties in the lower price range, knowing that the affordability has gone down since 2022, right?
Right.
But I do have some people that I know in the industry here in Winnipeg that are targeting kind of the upper five, six, $700,000 ARVs. But for me personally, I don't think I'm going to be trying to break into that zone all too much, unless it's like a complete butter deal. We're talking huge margin and very little work to do. Then we're probably passing on opportunities like that. Just because I'm still not, although things seem to be improving, I'm still not fully sold that we're in um the best market to be selling properties right now. I think there's still some room to go. There's still some people that need to get up and jump into the market. I don't think the large majority of people are still sold that inflation is done. Um, so until that happens, and it could be another year, I don't think we're going to be shifting our strategy all too much.
I think that's a wise approach. And at the end of the day, in Winnipeg, for those of you who are unaware, our benchmark price of detached homes is pretty consistently between about 380 and 400,000, and our average sale often hovers slightly around that as well for all property types. When you start listing stuff at about 800,000, that's nearly double what an average home in the city goes for, and it begins to require an income that very likely 5 or 10% of the population occupying the city is actually able to use to justify making a mortgage with a 20% down payment possible. Just eliminates a huge portion of the buyer pool, whereas the vast majority of the city, talking about household units, not necessarily individuals, could find their way into something starting with a 3 with a little bit of diligent saving and a couple of years of work.
Mhm.
So one of the things that I definitely wanted to mention here is, at least as of February 2nd, which is yesterday, there were 4 MLS areas that are in some cases quite large that do not have a single active listing on MLS right now, full stop. And I wanted to talk about these here because this is pretty interesting to me. I was quite surprised at a few of them. But I'm going to put a special shout out to 2E. There is an active listing in there right now. However, I believe it's mislabeled and should actually be 2F. So that area has nothing. But in addition to 2E, we have 1AW, which is Lord Roberts, 1F, which is South Boyne, the north side of Charleswood, for those of you who are unaware, 1JW, which is West Fort Garry, and 1P, which is White Ridge. Knowing that these areas don't actually have a listing, have you been purposefully going to these areas to door knock or targeting them with flyers or doing anything different with this knowledge, Denzel?
Well, I mean the HPI just came out yesterday, so I wasn't fully aware that there was actually areas in the city that don't have any properties for sale right now. But now that you mention it, I might be in any one of those neighborhoods next week. But yeah, I think well now knowing that, it wouldn't be a bad idea to see if we can get in front of some opportunities in those areas. I do think though that with the conversations that I've had with other agents, that they're going into houses and signing contracts, but a lot of these people are still waiting for, March, April to bring their properties to the market. And now not all sellers are interested in, a fast sale or, our services necessarily, right? And so they want to take the time to clean it up, make sure it looks good. And so, yeah, I mean, I think it wouldn't be a bad idea to get into these areas to do some door knocking, to do some flyering, um, and see if we can find an opportunity because, with our past, we just actually had a house in 2E, which is Meadowood here in Winnipeg, St. Vital, and it was very successful. And I'd love to get into another project there. Actually, now that you mention it, Keenan, I did a I did a wholesale in 2E. So technically there was a property for sale, but only I knew about it.
Yeah, yeah, it was not on the MLS, which
Not on the
to
MLS.
to 98% of the real estate public, that means they're probably not going to be able to see it unless they are very well connected to the industry, either as an investor or through an agent.
Exactly.
So I guess that is a really good approach, and I wish you the best of luck in your door knocking there. I know that the Judy Lindsay team will be flyering at least a few of those areas in the next coming weeks as well to see if any sellers are interested in making a move this year.
Yeah.
In addition to those areas, there are a couple neighborhoods that I am continuing to keep watch of. We've discussed 2E and 1M, which is Meadowood and Lindenwoods very closely, but I wanted to specifically mention North Kildonan, which is 3G. This area also had a very low volume of listings this early month, and it was one of the hottest areas of 2023 for the whole year, but it didn't really get off to a great start. Both of the active listings that were uploaded in this month were unsold at the time of the data dump, and one of them was a tenant-occupied property. I can't quite remember what the other one was, but I believe it had an offer date that was yet to be fulfilled. But I am also watching that area as one that could be very hot, but wouldn't necessarily show up in the data just yet.
Mhm.
So that's the gist of the update here for this past month. I'd like to take a second and pivot towards discussing some of the success that both Denzel and I had in January with the properties that were either listed, sold, or acquired. So Denzel, just a minute ago, we spent some time talking about the property in 2E. I just wanted to ask you a little bit about the story of this property kind of from the beginning, what you sort of had expected as an ARV, and then what the outcome actually was from your perspective as the investor and the seller.
Yeah, so funny, we came across this opportunity, I think it was in October or maybe September of last year, just a month after my daughter was born. And I remember that time of my life being extremely chaotic because I had a ton of stuff on the go. Anyway, so we go into the house, we have a look at it. It's exactly what we buy, in a great area, but looking at the data, it didn't necessarily suggest that the ARV was going to be, as high as we typically like it to be, considering the margin. I think at the time of purchasing, we bought the property for about 255. It's okay to talk numbers, right, Keenan?
Yeah, you can. I can't.
Okay. Yeah. So we bought this place for 255. The conservative ARV for this property was 350. We knew that there was no doubt in our mind that 350 was going to be unachievable. And so, because of that tight margin, I had some second thoughts about actually moving forward with this, and I tried to wholesale it. I just, contacted a couple of VIP buyers on my buyers list, And funny enough, there was actually one person who went and looked at it, and he was bugging me for weeks to get into this place. And eventually, we finally, we got in. I got him in the door, and he goes through it, and he's like, "There's no way that this is selling for 350. This is 325 all day. I think you bought it for too much." And
Oh boy.
when you hear that when you hear that comment, especially from someone who has done business before, who's flipped houses, it kind of gives you a sense of, um, I guess, second thought about what your decision was, right? But there was
Absolutely.
an appraisal at that time too that we got on the property that had that came in at 385. So there was a lot of it was a mixed bag of different opinions of what the value was going to be after the deal was done.
Sorry to
But
jump in. That 385 appraisal was an as complete appraisal, correct?
yes, as complete.
Okay.
Um,
Continue. Sorry.
no, no, that's fine. And so, we go through the project, renovate it, and we honestly just blow it out of the water. Just probably one of the busiest listings, or if not the busiest listing I've ever had in my career, in real estate. And yeah, that just goes to show that it really is. Um, it depends on what area you're in. Where I would say that taking a risk because of where you are is okay. I wouldn't do something like this in an area like in the West End or in Sinclair Park or areas like that. But if let's say we found a property in Tyndall Park, Keenan, or in the Maples, those are
Yeah.
areas I'd be open to taking a bit more risk, knowing that the demand is just so high, right? Like as you mentioned just earlier today, there's literally nothing for sale in that neighborhood right now. So with the 80 or 100 or 150 people that went through that house that we had, they're still out there looking for a place, so it's going to be a bloodbath when the spring market really hits and there's tons of, well, not tons, but a little bit more inventory on the market in that neighborhood.
Absolutely. And you know what? It's interesting that your perspective as the seller was that it was a bloodbath because I, as the realtor, hosted an open house that had a lineup out the door of people to the curb. It felt like 2020. The difference was no one was wearing masks. Well, I guess a couple people were, but um, it was really wild for me to witness and look at the faces of these buyers and their realtors coming to the open house like that. It gives you an almost ethereal sense of the strength of demand in that particular area. And I will mention that in addition to that 100+ person open house where I acted more like a bouncer than a realtor, I I would say that top of my head, I can go back and actually specifically count it because there were a lot of showings that doubled up on the same slot. But we had about 65 confirmed showings at that particular house in advance of the offer date. And Denzel ended up with a very, very attractive outcome there. And what he said earlier about taking the risk of doing a tighter deal in a really great area with a really solid conventional product is generally speaking the right kind of risk to be taking, as opposed to rolling the dice on something unconventional or in an area that's known to be less desirable, at least on an absorption basis.
Right. 100%.
Now, I understand, Denzel, that you've spent a fair bit of time door knocking this past January, and you had disclosed to me a little while ago that you have a goal to make a deal a week, whether that's an acquisition, a sale, a wholesale, or some other type of arrangement, whether it's a joint venture or whatnot. You want to update us all on how that's going and tell us some stories about your door knocking adventures?
Well, it's been it's been fun tackling a goal like that. In the past years, doing deals or finding opportunities has been something that I've just been good at and have had success with. Um, Door knocking in particular, though, is something new to me, and so I've had to really do a bit of role play with other investors just to kind of get the script down because door knocking is a very direct way of lead generation. It's important that you know what the dialogue is likely to be like and anticipate some of the questions and objections you might have right there. You think about the guy that's knocking on your door, whether that's a Shaw or Rogers or Telus or someone at the door, like you don't really want to be answering that and talking about it, right? So you really need to say what you need to say in 30 seconds to a minute max. Um, so I've gotten better at it, and I actually closed a deal through door knocking last month, which was awesome, and I'll jump into that in a little bit. But with regards to doing 52 deals a month,
A year.
sorry, a month, a year, a month. Could you imagine? Well,
That'd be
uh,
wild.
yeah, a year. Sorry. Um, you know, I have multiple different ways of generating leads. And so I believe that there is something out there somewhere. So, a mentor of mine said that as long as you have um, different rods in the ocean, there's going to be fish that bite. And maybe the fish isn't exactly what you want, but there's someone out there that could use that fish, or in other words, could be interested in the contract or the property that I might have. Um, and so right now I have, well, we wrote two offers this week and I have two contracts right now. So two offers, two contracts, still doing a bit of due diligence on them. And technically speaking, I know that we're in February. It's still the fourth week to me, at least in the year. So I have 2 more days to see if I can get a deal done. And then if not, there's weeks, and as you know, Keenan, there's weeks where there's 2, 3 opportunities at once, and you could bang out your entire months of deals in a week, just because of how it comes, right? So
It's true. It's
you
completely
know,
true.
um, yeah. So door knocking has been great. 52 deals in a year has been so far so good. And I'm hoping that we can get a deal done before Sunday. If not, then it's business as usual, and I'm fired up to get into the next month here.
I'm really glad to hear that. And I will just remind you and our listeners as well that I believe it was last February after the Judy Lindsay team released some flyers. There was a particular week where I believe you took contracts to 3 different properties, all within 7 days. So
Yeah,
that could absolutely happen again. And you never know when it's going to come.
yeah,
But I very much admire your goal of a deal a week. And as a realtor on the side of my business, I am also trying to achieve the same goal. And I am very proud to have been involved in 5 transactions so far this year. And at least a few of those were definitely involving Denzel. But I'm happy to help others out there if you're interested in hiring me for my services.
oh yeah.
Before we move on to the next question or the next section, pardon me, would you care to update us on some of the flips that you have coming up? And are you planning on bringing any property to market in February?
So we have actually 4 properties that should be done in the month of February. We have one in Charleswood, another in North River Heights. We have one in St. James that potentially might be sold already. I know that Keenan and I have already talked about it quite a bit. And
Absolutely.
I have another one in Crescentwood, which I believe on the last podcast I did mention. The one in Crescentwood is actually staged and ready to go. We are just it's always at the end of the project that there's something that just holds us up from listing. And so once all that gets dialed in, we'll be good to get this property on the market. I'm really hoping that this Crescentwood house gets on the market by at least Thursday, because as of today, February 3rd, I don't think there is tons of inventory in the Crescentwood area right now. So we will be without competition, which is exactly what you're looking for when it comes to, you know, uh, flipping houses.
I
Um,
I don't
yeah,
have MLS open in front of me, but I can say that Crescentwood as a neighborhood had 2 listings and 2 sales in the month of January for perfect absorption. And I don't have any active data in front of me at the moment to see if anything else has been listed since that data dump has come out. But you're likely looking quite good if that is the case.
for sure.
Okay, well that's a good update on the stuff that you've got there. It sounds like if you actually manage to get 4 properties on the market, then it should be pretty easy for you to do a deal a week if all of them manage to arrive on the market. during that month, and hopefully all sell on their offer date should you choose to go with that strategy.
Yeah. I mean, I guess now that you mention it, I technically did do 4 deals if we're counting the Pembridge sale, but for some reason I just when I think of flipping a house or something like that, I just think that doesn't count, but I guess it is a transaction, right? So I'm
It
no
absolutely
if
is. It
if
absolutely is.
if we count that, then yes, I am at 4
So,
for the year so far, if we count
and
Pembridge.
I believe you have another sale currently conditional, so
Oh, there you
that
go
should
there.
also be
5.
noted. Denzel's so busy he doesn't even count the properties that have sold as deals. He's so focused on the next acquisition that once the contract signed, it's that's the end of that one.
Yeah.
Anything else you'd like to share with us about your current projects ongoing, or would you care to move on to the next section?
I do, and I don't know if I do want to actually add one more thing, and this is just for I guess a tip for anybody who is looking at doing um development in real estate. I have had a lot more success this year with assigning general contractors to my projects. As much as I like to think that I could manage a project from A to Z because I understand the layers of construction of what goes into just like a residential property. Um, when you have volume and you have 5, 6, 7 flips or even 4, it gets really challenging to manage the circus, like making sure that your demo guys are in there. And then it's really challenging. And so with my goal of trying to do 52 deals this year, part of that strategy needs me to be fully focused on acquisitions, negotiating, and lead generation. And so, what I've done with the flips that I've just talked about, Crescentwood, North River Heights, Charleswood, and St. James, I've assigned general contractors to these projects, knowing that that's going to free up my mental bandwidth to focus more on making sure that the pipeline is constantly being looked after. Um, Now there is still work to be done, but I think that's one change that I don't think I've mentioned that during the last episode of what I'm doing this year. Um, yeah.
Okay, well that's a very good note to make for those of you who are out there and looking to do some projects. So very good tip, Denzel, and thank you for sharing that for everyone to hear. So moving on to the next section, I'm going to let you take the reins here, Denzel, but we're going to flip the script a little bit. Whereas in episode 1, I spent some time asking Denzel a series of questions about who he is, how he got started in the world of real estate, and what his goals are going forward. This week, Denzel is going to interview me in a very similar way, and I'm going to share with you guys a little bit about my life, my story, and my background. And in future episodes, we will be continuing with this same format. However, we will be bringing special guests on who are notable people in the real estate community. But without further ado, I'm going to let you take over here, Denzel, and I am ready to answer whatever it is you have to ask me.
Awesome. Okay, so last month we ended our last episode with Keenan asking me questions about who I am, how I got started in the world of real estate, what my goals were going forward for this year, what I do if I had to start again from scratch. This week, we're going to flip the script and I'm going to interview Keenan in a very similar way. Keenan is a exceptional realtor, definitely one of the hardest working guys I know. He does tons of deals in residential. I'm not quite sure if you've done any commercial deals yet, Keenan, but definitely residential. He lists apartment blocks, and he is a huge part of to my business because half, if not more, of the deals that come across my desk is from Keenan. So, um, yeah, Keenan, in a very short version of why you chose to get started in real estate, how exactly have you got yourself into the position you find yourself in today?
That's a great question, Denzel. So the very fast version here is throughout the mid 2010s, I was both a university student and I was working very hard at trying to become a professional archer, which sounds bizarre, but I do have somewhat of a pedigree in that sport as a national team member, world record holder, national record holder, and junior world champion in 2011. So, despite all of that, archery isn't actually a sport that pays very well for the vast majority of the population. You've got to be really, really something else to make it work. And while I tried to do that, it didn't end up panning out for me. So I found myself towards the end of a university degree without a clear direction of what I actually wanted to do when I was finished with school. So I took a moment and thought about how do people actually make a lot of money in Canada? And I thought of a few different industries. So the first of which is I knew there's a lot of people that can make a lot of money through owning businesses related to blue collar work, like trades, construction, etc. Like pick the general thing, whatever, some sort of trade, which I had no background or experience in. The other one was finance, which I knew required significant education and would require me to make a few major pivots in my education and basically start from scratch, which I didn't really think was a great way to go about life at that point in time. Additionally, I thought I could go and work in Alberta getting the oil out of the ground, which was dirty, would require me to move. And while it would pay very well, I wouldn't have that much of a life outside of it. And I also wasn't sure how long I'd be able to do a job like that. For those of you who may remember, there was somewhat of an oil bust in 2015. And this is right around the time that this conversation in my head was happening. But one of the last things that I could think of, well, actually, there were two. I also thought about technology, of which I also don't really know that much about. But the last category that I considered was real estate. And I didn't know exactly what sector or what part of the real estate industry I wanted to be involved in. But I knew that Guy Boudreau, my stepfather, was very involved in the industry and had been a realtor for, at the time, about 30 years. So I asked him a little bit about how to get started. And he basically told me that if I wanted to get a real estate license, it would likely take me 6 months to a year. And he would be able to mentor me and help me as I progressed through the early stages of my real estate career. And it was in that moment I decided I would at least give it a shot. And then if I needed to pivot, I would do something later to figure that out. But I was going to go all in and try to become a realtor from that point in time. I was licensed in late 2018, and 2019 was my first full market year.
Wow. Well, I always love hearing your story because I find it very interesting. You're the only person that I know that has done archery and archery at a high level at that. So, and then obviously just all of the things that you went through bringing you to this point is always, it's fascinating hearing other people's stories. So a question that I have for you, Keenan, being a high level athlete and really trying your best to pursue the goal of becoming a pro archer, how do you think that mindset and that work ethic that you had in sport has transferred into the business world?
I would say it's a common trend in any business leader or any successful person, whether they're an entrepreneur or an intrapreneur, a person working for the success of a company under a different owner. It translates very easily between effort and success in sport and effort and success in business. So I can say that all of the effort, all of the time, and the psychology that I put into improving at an obscure sport like archery was pretty easy to shift into focusing on real estate, even though it's completely different in the actual mechanics of improving at the industry. Whereas in archery, I spent a lot of time at the range working on form, execution, shot sequencing, breathing, aiming, and other psychological aspects of the sport. In real estate, I honed my game by listening and reading as much material as I possibly could about the industry, the economy, and anything whatsoever surrounding the sector, whether it's an influential individual in the industry writing a book or just learning about the history of the city with the property that I'm trading. And I think that was a huge boon to my success and my ability to, first of all, get my feet off the ground, but second of all, continue to scale now that it's been about 5 or 6 years of working in real estate.
And I just want to make a comment here. I noticed that the most, or at least a lot of the successful agents that I've spoken with have a really good understanding of the finances, or like, or just the finance world, depending on what's going on with the economy, because it has such a huge impact on our industry, whether that's, well, interest rates especially. But whatever is happening in the economy definitely affects us in our world. So yeah, I think that's, you're doing great.
Well,
Uh,
thanks for that, Denzel. I appreciate it.
all right. So getting started as an agent, I heard, is pretty tough.
Mhm.
I think something like 80% of people don't last a year and 90% don't last two. Was there ever an aha moment, or in other words, a moment where it all clicked for you on your journey here so far?
Yeah, it's the attrition rate in the industry, at least for realtors, is pretty high. And I think what you said earlier about the best agents being the ones who understand economics, finance, and markets is particularly true. And I think that's where a lot of people get stuck. It's not where everyone gets stuck, but it's a large part of it. There's somewhat of a perception in the public that realtors are basically all walking around like Derek Zoolander going, list with me because I'm handsome, and blue stealing on bus benches. If you kind of get the image that I'm trying to, make for you here. But in reality, not understanding some of those background things about the industry is the big issue that I think most people face, and why they stop after 2 years, because nobody tells people you need to figure that out. In addition to all of that, I'd say a lot of realtors who maybe do understand that stuff or have a background that allows them to be able to communicate that stuff might lack interpersonal skills. And to me, in addition to spending a lot of time reading and learning about this kind of material, I also worked a lot on improving my interpersonal skills. And I wanted to make my speech as precise, concise, and easy to listen to as possible. And I found that actually both reading and writing really helped me with that. So I would say that at some point in 2020, during the lockdowns, the journey that I took in self improvement to, first of all, learn all of this stuff, and second of all, improve my ability to communicate with the widest array of people as possible, was the moment that it all clicked for me. And I knew by the end of 2020 that there was no way I would be leaving this industry due to inability to make income. If I were to ever leave the real estate industry, it would be entirely on my own accord.
Yeah. Yeah, I know, again, real estate is such a it's a people business, right? It's you're on the phone all day. If you don't know how to connect with people, it's going to be a very tough business for you to stay alive in. You mentioned self-development, and I know that that was actually something that we had in common, and it was almost like we were at the peak of the that euphoric feeling of when you're on that path of just self-improvement.
Mhm.
Um, Today, do you feel that you have the same drive to constantly be leveling up your skills, or do you feel like over the past year since the pandemic has ended and your time, or what you spend your time on, is a little bit different today?
I would say that I am as motivated as ever, but for different reasons. And I'll be as explicit as possible here. But in 2020, my goal was to run to a goal. I was chasing a dream at that point. And in 2024, I am running away from the nightmare that would be if I stopped everything. The difference being, I am motivated now by not losing what I've gained as opposed to running to what I'm after. I have different goals, don't get me wrong, but the habits that I've built, I am continuing to stack and build on because I've seen what they can do in even just short bursts throughout the day. Like leveling up a small amount every day really compounds over time.
Yeah.
And years and years of that will take you above and beyond your wildest dreams. But the biggest thing for me is I understand what would happen if I just stopped everything, and I don't want to live in that reality. And it very much scares me to think that that could happen. So I discipline myself in a way to avoid that and chase the next big thing while running away from what I don't want to see.
Wow. Awesome. Okay, so there's a lot of people out there who might be surprised by this. Um, but at the time of this recording, Keenan doesn't actually own any rental real estate. Do you mind taking a minute to explain why that's the case?
This is a question I get a lot, and it often goes something like, how do you know so much about this and you don't actually own a rental? And my answer is generally one of these two. The first one is every time I see a deal that I know is a good deal, and believe me, I know a good deal when I see one, I usually just call Denzel and sell it to him.
Yeah, I
And
can't.
that's what has happened for 99.9% of the time I've ever even considered this. It's just, it makes more sense with the business that I'm running to work as a realtor and middleman the transaction on Denzel's behalf, earn a fee as income to do that, and just invest the money in something else because the opportunities, like, we're pretty good at finding them, I think, Denzel, but they are still limited. We can't just go out on any given day and buy a 30 cents, 40 cents on the dollar deal. You got to wait for those. They only come around every so often.
Mhm.
So, in order to support my business as an investor focused realtor, I think it's the most responsible thing I can do to not buy those 30 and 40 cent on the dollar deals for myself, but rather give them to the people that are supporting me in my business first and foremost. I am a very big investor in other assets. I prefer more liquid ones. And due to my exposure in the real estate market for my employment income, I think it's responsible to diversify the ways that I both keep and store my money in other avenues. But in addition to all of that, I have quite a busy and hectic schedule, and I understand that hiring property management is a thing. And when I eventually do own real estate, I will definitely hire somebody for this. But rentals are work; they are not totally passive income. And I'm sure Denzel is somebody that owns a lot of rentals. You are sometimes bothered by calls you'd rather have not gotten.
Oh yeah, yeah. Owning rental properties is something that I would say that should only come after you find a business that generates a massive amount of cash flow. And rentals should be something that you are basically using to park cash. When I first started, I was under the impression, hey, if I own 10 rentals and they make 250 a month, I'm looking at $2,500 passive a month, right? And that's certainly not the case. A furnace goes or plumbing issues at a house and say goodbye to your cash flow. So
Mhm.
I honestly do think though, Keenan, the best acquisitions people are people who just focus on acquisitions. And you being someone who does tons of business, it just goes to show that you're focused on what you're best at. Um, because if you're busy flipping a house or managing a job or calling and lining up some tradesperson to fix something wrong at your rental, how are you supposed to be out there finding the next deal or closing the next lead? Like I just don't think that it would be very beneficial for you to be tied up with other things outside of what you're really good at. And that's something, that I've actually recognized with myself. Um, just trying to save money and stuff here and there and trying to do things myself. But the reality is the best acquisitions people are the ones that just focus on acquisitions. And that's why you're good at, it's why you are where you are, in my opinion.
Well, thanks for that. I do appreciate it.
No problem. So you mentioned that you will eventually get into rentals. What kind of property would you most, or do you see yourself owning as like your first rental?
I am not 100% committed to this answer, but in my head, this is the romantic version of what I think I'm going to go for. And generally speaking, what I would like to own is a very average, very reasonable bungalow or bi-level built sometime between 1950 and about 1980. And I would like it in an area that is not horribly divergent from the benchmark price for Winnipeg detached houses.
Mhm.
So I'm thinking something like 1,000 square foot 3 bed 2 bath bungalow with a detached single garage in Crestview, Westwood, um, somewhere in St. Vital, like 2E, for example. I know we talked about that area a lot. Charleswood's also fine. River Heights, the south part, would be totally fine. Either Kildonans or even Transcona. So very general. However, what's more likely to happen is either I'm going to make a mistake and accidentally get somebody in a deal they didn't want to be in, and I'll just have to buy it to take the honorable route of getting them out of it. Or there's going to be a situation for some other product that is just too good to pass up, and I'll do that.
Yeah, for sure. Or we get into building apartments.
Or that, but I kind of think that that might be, I don't know that that's happening tomorrow.
Yeah. Okay. So, a couple more questions here. So, if you could give your past self advice on how to get started in business, what kind of things would you say? Or, in other words, if you had to start over from scratch, knowing everything you know now, what would you do?
Wow, that's a tough one. I think if I really have to boil it down, and I could go back to, talk to myself the day that I got my real estate license, the first thing that I would say is spend every single minute of your free time, whether you're driving, whether you're just at home or doing whatever, reading and listening to audiobooks, and learn as much as possible about the financing side of this industry. Because if you're a realtor and you don't understand how people are actually getting and moving the money to make these deals possible, you're hopeless at selling them anything. People are smart, they're not dumb, and when it comes to their money, they're not careless. If you don't get it, you have no chance. And the sooner I realized that, the better I would have done earlier. But instead, it took probably a full year of kind of flopping around and running around like a chicken with my head cut off, opening doors and showing houses and crossing my fingers. And I'm glad it worked as well as it turned out to, but I could have been a lot more efficient had I taken that approach from the get go.
Yeah, absolutely. Well, it's all wisdom, right? It's all experience. So I wouldn't beat yourself up too much about that. But yeah, man, like you have done some pretty big things, and I only could see um, bright things in the future for you, Keenan.
I also see bright things in the future for you, Denzel. So I'm glad we have a mutual understanding there.
Okay. And so last question here. Can you explain the direction you're currently aiming to take your business over the next decade? Is there an end goal or grand achievement in your mind?
I've spent a fair bit of time considering and thinking about this. And at this point, I would say the biggest goal that I have for the end of the decade is to make sure that whatever I'm involved in the industry, that I can A, still spend time with my family, and B, create a situation where I am as independent of a market presence for either the commercial space, the industrial space, the flipper, the developer space as I possibly can be. I want to build a brand, and I want to build a, not really a persona, that's not quite the right word, but I want to be known as a source of information, a source of knowledge, and a reliable person to execute transactions for people in that kind of situation. And you know what? Whether or not I'm acting as a realtor at that point is unclear to me. I may not. There may be some other situation in the future, like getting into the development of apartment buildings or something else. But for now, I think that being a realtor, first of all, is very fulfilling. And I do feel very passionately about doing the business that you and I do, Denzel. And I could easily see myself continuing along that path for 10 years and just simply improving as the time goes on, as I get better at the industry and as we grow together in both of our businesses.
Yep, definitely.
I don't know that there's a grand achievement in there besides just doing better and always being better.
Yeah, it's I think for as a high performer, it's just something that will continually um chase for lack of a better word, right? Always looking to improve from last year or like there's still so much for us to learn, right? And I think that both of us have already learned a ton, and this year is poised for what could be one of the biggest years that we've had um in our careers. So
I would agree with that. And I think next year will probably be bigger.
yeah, exactly.
For what it's
Exactly.
worth.
Yeah. Okay, well, that's it for our episode 2 of the Winnipeg Market Watch podcast. Keenan, is there anything else that you would like to add and leave for our listeners today?
I would say just don't forget to subscribe if you'd like these updates and podcasts emailed to you directly. And if you have any questions for me, you can reach me by email at Keenan, Keenan, at judylindsay.com. And Denzel, if you would like to work with him either as an investor for any of the projects that he may or be working on right now, I would encourage you to reach out to him as well. And if you have any questions for the both of us, I'd strongly encourage you to leave a comment under this podcast. Either one of us would be very happy to reply to you publicly.
Yes. Yes. All right.
That wraps it up, guys. Thanks again for listening, and we are looking forward to seeing you next month.